Most traders lose money simply because they can't read where the market is going. Give me 3 minutes and I'll break down the most easiest top-down analysis strategy that reveals the trend, the key zones, and the exact point where smart monies enter. And no, this isn't clickbait. You will see things for yourself. Welcome back to Finsbook. My name is Juliet, and here we teach you simple and practical ways to trade the financial market and stay profitable. Today, you will master the easiest top-down analysis strategy that works on gold and all Forex pairs. If you are new in this channel, kindly hit the like button and subscribe. Leave a comment below and share this video. Let's jump straight into the chart.
The first thing to do is to go to the higher time frame. This is the first thing professional traders do. The higher time frame shows you the overall direction of the market. And in this higher time frame, this is one monthly time frame. You can start with monthly time frame, you can start with weekly time frame. But for educational purposes and the purpose of this video, I'm going to start with higher time frame for clarity's sake. We're going to look for two major things here. The first thing to look for is the current trend. Second thing to look for is the key zones. Judging from this, you can see that gold is in uptrend. So the next thing is putting the key zones. This is the most extreme resistance zone. I'm going to mark only two zones here. The most recent resistance zone and the support zone. Our support zone is not that too clear here. So when you are looking for anything in a particular time frame, and in that time frame it is not that clear, move to the next time frame that is following the one that you are working on. There are key zones here, but we pay much attention to where the current price is, and the current price is here. The support zone is not that clear. I want to move to the weekly time frame. So this is the weekly time frame. So I had to adjust a little bit. Perfect. When you have these levels marked cleanly, the next thing to do is to mark your previous week high and the previous week low. I will equally tell you what you will use that particular information to do when you go to the lower time frame. You don't need to cluster your chart with lines, too many lines. I am doing this to take it step by step so that you understand it much better. I changed the color so that when we get to the lower time frame, you will remember that this blue line is coming from the higher time frame, which is monthly, and the gold line is coming from the weekly time frame. Next is to head over to the daily time frame. This daily time frame, we need to also mark our previous day high and previous day low. After marking it, I will now tell you how to use the information. Keep watching. Looking at this gold, generally, it is in a consolidation phase. Remember the three phases of the market. Either the market is trending to the upside, or is trending to the downside, or it is consolidating. This is 4 hours time frame. In fact, we've been coming from the monthly time frame. So market is consolidating. There's no clear movement here. Now, the information that you use this daily high and daily low that you mark to do, one is, if price is moving to this downside, if price break this daily low with a body close below, the next target of that price is to break the weekly low. And if it also break the weekly low, with a body close below, the next target is to return back to this support zone. On the other hand, if price break this daily high and close above with body, the next target is to go and break this weekly high. If it breaks this weekly high and close above with a body, the next target is to return to this resistance zone. How does this information help your trading life? If you are on a trade, it will help you to manage the trade. What it will help you do is if you apply Fibonacci retracement. I will try it when we get to the 1 hour time frame. But then at the 4 hours time frame and 1 hour time frame, that is the next step. What you do in this 4 hours time frame and in the 1 hour time frame is to look for what we call point of interest. What is point of interest? Where you want to enter a trade. Like I said, this is a consolidating phase of the market. If I am the one trading this, I will look for a point of interest in 1 hour where price expand, but I have to be extremely careful because price is ranging. If not, I won't take a trade here until I see a break, price breaking either the daily high or the daily low. Currently is at the middle. We all can see it's very obvious. Price is ranging. So I want price to break out of this range before I can find a trade. I'll wait for price to return back to this support zone by taking away this liquidity here and tap into this zone. Then I'll go to 15 minutes and 5 minutes and take a trade. What it means is that I have to observe what is going on. I have to observe price, take out liquidities around here, then tap into this zone. When the price tap into this zone, I will now head over to this 15 minutes. Then I will also want to see price return back to this supply zone. This is another point of interest. There is market inefficiency here, or what we call fair value gap here. This is area of interest for market makers, and these are liquidity seated here. What we are looking for when we are marking our area of interest is what draws the market makers' attention. If what draws their attention is seated below your point of interest, as in the case of this supply, that point of interest is likely good. It has a higher chances of holding. For instance, we have this fair value gap here and we have liquidity here. The market makers are interested in where they will make money. So they will come to clear this liquidity and they clear this FVG. If they come and take 50% of this FVG, don't panic. This is where patience and discipline comes in trading. They will clear this FVG 100% and they tap into your area or into your zone. Again, if they flip this zone, the next thing is to clear a small FVG, fair value gap here, and they tap into this zone. That is why I call it point of interest too. In these two zones, the chances of them activating this order and the return back to this zone is not always there. They might tap into the zone and return here. Do you know why? Because gold has much interest at the upside than the lower side. So we've gotten point of interest 1, 2, and the one at the support zone if price return to this support zone before moving. The next thing is to get to your 15 minutes time frame and refine these zones that we marked here. Trade what you see in the market. Price might return to this support zone and push to the upside because what gold is doing currently is to reload buyers. So if you return to this support zone and start pushing, it will be clearing these zones with speed. Once it reload buyers and gather enough momentum, it will just be clearing this point of interest because of what? The next target of it is that resistance zone. Know this and know peace. You come down to this 5 minutes time frame, look for a pullback into that your zone or a clean shift in market structure or an engulfing candlestick pattern, a shooting star, a hammer, as the case may be. Trade what you see. You can do your analysis and get it correct. Market will still do what it wants to do. Next is your risk management. This is the part that saves your account. Put your SL above the supply zone for a sale order. Then your take profit around this zone, as you can see here. If you look at the risk to reward ratio, this is 1:3.04. A trade that gives you 1:3 and above means growth, not just ordinary trade. It means growth. Trading is very much easier when you understand where price is heading and why price is going that way. This analysis works not just in gold, all currency pairs and every other financial market, crypto indices, futures, it is the same. Even Nasdaq and S&P 500, they are the same. Just understand how it works.
This strategy works in all the financial markets. So long as that financial market uses chart and candlestick, this strategy works in all of them. Rewatch this video, practice it, backtest it, and master it. Subscribe to Finspoke for more weekly analysis and simple trading guides that will help you grow with confidence. Till I come your way again, peace.